Okay, welcome everybody. I'm not sure who's currently here. I don't have access to the comments just yet. Let me just see. Bear with me 1 second. Okay, so what is this? Obviously, this is more of a framework to get your head into trading, right? A lot of trading. Oftentimes, when you come across a new chart or whatever type of trade you're trading, whether you trade cryptocurrency, whether you trade forex, any kind of indices, stocks. For me, there's one way to. Well, there's multiple ways, but for me, there's always one way that comes above all. At least when you're trying to build a framework, the most important thing I think is when you look at a naked chart like this, you may have different kinds of setups, but I don't think there's anything better than being able to kind of map out some key high-level time frames, understanding where price tends to get sticky, and then being able to use that for predicting where future price kind of may go. So we're going to kind of cover a little bit of that. Maybe one or two indicators. This isn't going to be a fully super techie session. It's more just around setting yourself up for success, and that's the key takeaway from this. So this can be done on any chart. So it's kind of like the very first thing you should do. As I say, it doesn't matter what type of chart you're trading. The very first thing you should do when you get a chart is apply this same kind of analysis. Now look, I can't see currently. I can't see who's in the comments or actually who's here. Actually, can I? Yeah, awesome. Oh, we have Mr. Peterson. Hello, sir. How long can we expect this session to be? Hopefully not too long, to be honest. I don't really want it to be an awful long session, so hopefully not a crazy long one. But listen, feel free to give me a chart, some sort of a ticker symbol, and we'll do some analysis. I mean, I'm very familiar with BTC. Hey, Buff. BTC is one that I know quite well, but it's probably a bit unfair if I analyze BTC, given that I think you can probably run the same similar analysis on pretty much any chart, really. So just if anyone in the comment section wants to tell me a specific type of whether it's an altcoin, whether it's I don't know, a currency pair, whether it's an index, give me something to test ourselves on, and then what we want to do is go back in time a little bit, and then let's see how good we can apply some TA. This is a masterclass, of course. So someone pick something. There will be a little bit of a delay from the time I speak to the time comments come through, so let's just see what you guys have got. Okay, no one really wants to say anything. That's fine. Right, okay, let's just stick with BTC then, right? But what we're going to do to make it a bit more challenging is we are going to BNB. Perfect choice. Let's go with BNB. Right, okay. So what we're looking at right now is a completely naked chart. Okay, so right now it's nothing here, just pure price action. Someone shouted out BNB. That's a good enough coin for me. So let's go BNB. Here we go. Now to make this a little bit more fun, let's just say, I'm going to go on the 4-hour time frame, and then I'm going to go, let's see, how far back do I want to go? I'm going to just hit the replay mode here. You can see that. Actually, let me just take that off a little second. We'll go right the way back here, and we'll just take the replay to somewhere here. Right? I don't know. Just we've taken it back, to a distance. So what we don't know is where the price action is going to kind of come from this point. But what we want to do is we want to analyze the data that's happened prior to, so we get an understanding about what might happen, you know, in the future. And is how we do it, right? So the first thing we're going to do is we're going to pick up what's called our high term time frames, right? And we do them on monthlies, weeklies, and dailies. So the first thing we're going to do is select the monthly. Now, because I'm on Bybit, we only see, well, I think Bybit's been trading, I don't know, since about 2018, so it's only going to show us this amount of data. So what are we looking for? We're looking for key trend changes. So where does the trend change? And then we're going to map a data point. So we can see here, and we work backwards, bullish trend. Yeah, so we can say trend goes bullish, bearish, bullish, nice and easy. That's not too difficult to understand. So we just mark. Now this, we want the magnet tool on because we want to be really accurate with this. It's important. We want the magnet tool on the candle body of the candle that changes the direction. Okay, so if you look, this is the candle that changed the direction from going bearish back to bullish. So we mark that on the chart. I've saved this as a template and it's a monthly. So now I've got a monthly key high term time frame. Now the next one is going to be here because this was the next move up, and this was the candle that changed the direction. So we're going to mark that on the chart, and that's going to be a monthly high term time frame. Okay, that's it really. Other than the bottom one, we'll just, that's not really one we'll change, so we can skip ahead. Now we move to weekly. Perfect. So now we do the same process, okay, but we need to expand this a little bit. So where do we change the direction of travel? So if we work back, this level here was where we had the direction to the down, and then we moved up. So we'll change that there, but this time it's a weekly high term time frame, and we'll just explain what these all do in a second once we move forward. So I'm going to skip through these a little bit just to make it faster. All I'm basically doing is wherever we see a change of direction, we're just going to put a horizontal ray on the chart, okay? Weekly. And you see how powerful these become, you see. Template, that'll be weekly. And like I say, this doesn't matter on these whether you, whatever chart you start on, whatever chart you bring into the table, you apply the same kind of logic, you know, each time, because it will give you a framework for where you can expect price in the future to essentially move to. So as you can see, all I'm doing is just mapping out wherever I see a directional change on the body close or the body open. But if it's a bearish candle, that's where we're poking it, which is why it's important we've got the magnet tool on, because the magnet gravitates us directly towards, you know, that exact point of the open or the close. So we're not going to do every single one of these. I don't think we really need to, because it's, you know, depends on how far you want to go, but realistically you don't need to go that far. I'll just do this last one here. Everyone in our server, or the Apex Trade server, will be well aware of this technique. Okay, and then the last one we're going to do is the daily. Okay, so it's getting a little bit muddy now, but what we're going to do to tidy up the chart a little bit, you can see in this bottom right here we have this object tree. We can select all of these. We can select all of these, right click, create a group, and we'll call these key levels. Okay, nice and easy, and then we can just hide them for now. Now we've got to do the dailies. Now you can see on the dailies there's quite a lot. Now currently here's where the price action is, so really I'm just going to focus my key daily levels. Let's just take this magnet off a second. My focus is just going to be where these key daily levels are, so I just want to maybe focus here. Anything above there is probably a bit too high. Anything below there is probably too low. Really, I mean, if price starts to move down here, you'll want to start bringing in some key daily levels here. But up until that point, you just want to focus on a specific area. So Again, new high term time frame. So dailies. So this one be here. Sorry, let me just. We go magnet again. So this one's a daily. Once you've done this, by the way, you've done it. It will be on your chart forever unless you decide to delete it. And the only time you're adding these key levels is each time you get a directional change. Now the significance in these, by the way, is simply because you know, if you're getting a directional change on a daily time frame or a weekly or a monthly, that's obviously significant. If it's happening on like a 5 minute or a 10 minute or 15 minute, it's very little significance. But on higher time frames, there's a lot of significance to these key levels. So it's why they're important to map out on the chart. Because once you get down to them smaller time frames, by the way, it's where you lose focus a little bit on the bigger picture. And that's why it's important to keep that bigger picture always in your purview. Okay, just continue. Now this, by the way, guys, is proper basic stuff. You don't need to be a super smart technical, you know, TA person. It's just really basic stuff. It's just mapping out where key daily levels open or close. And yeah, that's pretty much it. Because you'll see in a second just how powerful price gravitates towards these in future sessions. Now look, you can see here, I'm not going to go any further because we're outside of this box, and this is just a box I draw by hand, but you'll see, you know, still in this kind of area. We've got one here, that's fine. Not too much more to do now. By the way, if there's any questions, guys, feel free. How do you get the lines to snap to the body of the clothes? So there's a magnet tool here. You can choose whether you want that to be weak or whether you want that to be strong. Really, the magnet tool just allows you to magnetize to the physical, whether it's a wick, an open, a close. So that's what we're looking at. Okay, and that's daily. So I think that's it. Yeah, perfect. So now we've got, I'm just going to drag these into our key levels. I'm going to delete this triangle and we're going to bring everything into focus. Now you look at that and you think it looks a little bit messy when you first, you know, spot and identify this. Now we are missing a couple of key time frames actually, which I've missed because I'm rushing. Let me just put them in. So one here, daily. We have one. That one's there. Already picks that one, so we don't have to worry there. Put one there. Obviously, you're going to have a lot more dailies than you will have for weeklies or monthlies, just by virtue of the candles themselves. Okay, nearly there, guys. I know this can sometimes be a bit of a boring and, you know, timely affair, but I think once you kind of get the hang of this and understanding this, it becomes a really powerful tool. Okay, so I don't think we need to worry too much about them. So let's just stick all of these in the key high term time frames. So we've now got our key high term time frames mapped, right? Now on the chart, on our daily time frame, we can do that, and we know that these are all significant changes of momentum, yeah, whether it's monthly, weekly, or daily, and we've mapped them all out using just templates for different colors. To do a template, by the way, just if you put a horizontal ray on a chart just like that, so I'll just go, where are we? Let's see, oh, I've got to be a magnet, so if I just put that on the chart, if I double click on that, you know, I can call this random or whatever. And then you can just, you know, say whatever color you want, template, and then save as, and then give it a name. And then each time, if you right click on a line, you know your templates would come up here. So you can, that's how you create a template for a specific element. So now that we've got our key high term time frames, the next thing we want to be able to build on top of this is our volume profiles. So what does that mean? That means where is most volume traded on a chart, and moreover, why is that important? It's more where high volume is traded on a chart. That's the most important areas of a chart for whales, where big amounts of money get exchanged. Because if you think about it logically, if I've got a shit ton of cash that I want to trade, if I'm trading in an illiquid market or a market that doesn't have a lot of liquidity, but it does at key levels, and I try to get out of a trade, let's say I want to drop 10 million, $10 million worth of Bitcoin in an area where it's very illiquid, as in there's not an awful lot of liquidity. I'm going to get wrecked on price impact. I'm going to get wrecked on slippage. The difference between where I want to get filled as a market order versus where the actual sale occurs, or the buy, depending on what it is, can be crazy. So where you get really sticky areas in a chart, or areas where there's a lot of liquidity, that's the best place for market makers to be able to trade in. So you will often see big price movements going on between two areas, and that's simply because it's where market makers like to move that money. So we've got our high key time frames built out. Now, just to show you kind of how this moves forward, right? We're just gonna add these three to here. It will get better, guys, I promise. Right, I'm gonna get rid of them, and now what we're gonna do is bring in our indicators, right? And what we want is something called the visible range volume profile. Now, these are the two basic things you do, right? Each time, the two most basic things we do. We're going to go to the 4 hour, and we're going to pick just, and this part of the chart. Now, what does the visible range mean? So whenever you're talking about a visible range, you are talking about the area of the chart that you can visibly see. If I move this back, so what we can see, by the way, is where you're seeing these spikes. This tells me where the volume is being traded, and I'll explain why this is really important in a second for trading. But you can see where the spikes occur, where you get consolidation of price. You can see here, this is the most traded volume of the visible range. So between August the 23rd right the way back to the 5th of April the 5th, that those 3 or 4 months, the most traded volume was actually $313 when BNB was that price. So it gives you an indication of where price likes to kind of congregate and consolidate. So it's called the volume profile. So you have the POC. This is the point of control, the most traded volume. You have the high level. So this is the 70% range. So what it normally does on a value area high, or this what do you call it now, the volume profile, is it'll take the most traded volume as a 70% snapshot of this whole range, and we'll print out what's called the value area high and the value area low, as well as the point of control. So this 70% range, the blue bar is called your value area low, the blue bar at the top is your value area high, and then the middle bar is just called your point of control. So what I always like to do just on this range is to just, again, map them out, right? So we're going to have a second set of drawings now. So we'll map the value area high. We're just going to make this blue, text VAH, value area high. And you'll see what I'm doing here is took absolutely no skill whatsoever, okay? Just basic, copying lines on a chart, nothing more, nothing less. Doesn't have to be any more technical. Okay, so that's that one. And I'll just copy paste. I'm going to just drop that on this line here. I'm going to call that one the value area low. Feel free, guys, to jump in with any questions at any one point, by the way. And then we're going to just copy the point of control. Okay. Now remember, what we've done here is we've put a snapshot in time, okay, of a price back in August, I don't know what, 2021. So what we're going to do now is, the way we're going to move this forward is, we've mapped out our key high term timeframes. We're going to map out our volume profile, and then we're going to see how powerful that is moving forward, about how price respects certain levels. Doesn't matter if you don't know how to put support and resistance lines in. Yeah, this is all done towards being able to give you that kind of framework to identify where price is likely to get caught up or get sticky. Okay, next one is POC. That's point of control, most traded volume. Okay, then we just make this nice red. And now what we've got to do now, which again can be quite a task, is not every point, but all of the points where we stick out here is where we want to put a horizontal line. Okay, now this is called our volume profile. I'm going to rattle through this, but you want to try and be as accurate as possible. So what I'm doing is, you can see where you got a point here, point there, point there, point here, point there, so on and so forth. I'm literally just putting a horizontal line at the peak of them. Now what you can do to make it a little bit more obvious is, as you get to the more higher peaks where even more volume's being traded, you can actually make them lines a bit fatter, just so it sticks out as a more prominent area of trade. Okay, I'll just put one there. I'll make these lines a different colour in a sec, just I think they'll be easier on the eye. I don't think this maroon is too good of a colour if against a black background, but as I say, this is just really basic stuff to get us started. This is just about giving you some tools to build a framework around. You know, we can get fancy with TA, we can look at Elliott waves, we can look at Fibonacci retracements, we can look at all of the kind of cool stuff that gives you an indication of where price is likely to come or retrace to. But what indicators don't really give you, a lot of it is lagging data, so it'll take previous data to figure out where price may end up next, and sometimes that's just, in my opinion, not good enough. You need to have an idea of where price gets sticky, why it gets sticky, and then be able to trade in and out of those areas. So it looks like we've got a shit ton of lines on a chart, and you think, well, that's really going to cause me some problems. Yeah, but when we zoom in and we go to like the 15-minute or the 30-minute or the hour, well, these lines are much further apart. A few more to do. Okay, I'll just pick that one, that one there. We teach this stuff all day long in the server. Now, obviously, as a compadre of MDB, one of the things we are doing is sponsoring traders to trade if they go through the Apex Trades training sessions, which covers all of this stuff anyway. It's almost like you're getting a little bit of an head start, to be fair. But it's going to be awesome. Right, okay, perfect. So now we've done our volume profiles, right? So again, I'm just going to tidy these up on the chart. Right, I'm going to add them to a folder. Rename volume profile. Now, I don't know, this is not the free version, this is the pro version, so I don't know if you have the volume profiles like I do. However, what you do have as a stock is so this one's called the visible range volume profile. I think it is actually part of the suite. I may be wrong, but if you just type in VRVP, it will bring up the visible range volume profile. It's a really, 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 really powerful tool. Probably one of the best tools in my opinion for mapping this out. So we can take that off the chart now. Don't really need that because we've mapped it out. Now just remember, the volume profile will change as time goes forward because more volume might be traded in a different area. So you want to keep just checking this every few days just to make sure it's on point. Okay, so let's get rid of that. Nicely back to our naked chart. Now what we're going to do is we're going to go into the 15-minute, right? 15-minute time frame. So we're assuming now that this is current, right, live data, as in we're looking at this information today. I'm going to put my volume profiles on the page. Now all I've got is lines. I'm actually going to probably just accentuate them a little bit. Let's make them yellow, and let's hopefully they stand out a little bit better. Okay. So nice VRVPs are yellow, and we've got our key high term timeframes, right? So right now, I mean, look, we don't need to have every single one of these on the chart, but what we want to do is we're trying to understand now is as we move forward in time, how well do these get respected, right? So we're currently at $487. Now, wouldn't that be a beautiful thing if B&B was at that price? Anyway, right, so let's go forward. So we're gonna do this times 1. Let's see, that's a bit slow. Let's do times 3. Okay, so we're moving it forward in time. In fact, let's just do times 10, right? So as the price is going, how well? So we're now trading within this daily and this weekly range. Okay, so first things first, right? We counter trend. So a lot of what I do is reverse trending, so going against what the reverse is. So if you remember, we've now set up key high term time frames. What's just happened? Live, we saw the price come up, pick this point to the absolute dollar, yeah, and then it came down. Where did it go? To the weekly. Came through the weekly, just missed the daily as a bounce off. So already we're seeing some value in high term time frames, yeah, for getting an entry. Now that's gone from 494 down to 481. That's a nice, however many dollar move. That would have been nice depending on what your leverage levels are. But anyway, let's continue. Now we come back up. Again, congregating just around your weekly level. Now we've gone down, just missed. But if you look, the yellow here, in fact, let me just make these nice and bright because I think it's important to understand settings. Let's just make that where's the opacity? Oh, my bad. Sorry, wrong one. Okay, so the yellow ones are the volume profile. So again, we've mapped out previous data, remember, but now we've just absolutely tagged a volume profile to the absolute dot, where we've come straight back up, tagged a daily level. The reason this is important, by the way, if you haven't been able to make this step, is because right now we don't know where price is going to go, but what you can, as a trader, all you can do is try to get a setup that gives you an indication of where price may likely to go. Now right now we're not looking at anything other than purely putting lines on a chart. We haven't looked at whether we're overbought, oversold, whether we've got any kind of idea around an Elliott wave, as in where are we within a structure. Are we bullish? Are we bearish? We don't need to know any of that at this stage. All we need to know is if price comes down here, how likely are we to bounce? And if we are to bounce, where's it going to bounce to? Okay, well, maybe it's a good idea to maybe put a long in here. Maybe it's a good idea to put a short in here. How well is this respected? These are the questions you have to ask yourself each time you come on. And again, it's just mapping out these data points. So let's continue. Again, you can just see, I haven't done anything other than just map out these key time frames. I mean, look, you just see how well these are respected. I mean, look, it's going really fast here, but in terms of being able to think about where you can get trades and you're just trading level to level, what we're seeing here is just these prices just absolutely respect key high term time frames and volume profile areas. So areas in the chart where we get sticky, you can just see if you're trading level to level, whether you're day trading, you're trying to get in and out. I mean, just look at that one just as an example. Huge big scan wick. And by the way, this would have been an order block area here. Yeah, and we'll see how this comes on a bit further on down the line. But again, crashes through a volume profile to the dollar, hits a daily time frame, comes straight back out. We haven't done anything. We've literally done nothing. That's all we've done. Just literally put out some key time frames. Someone asked me to pick BNB. We picked BNB, and it's just purely price action. And again, I look this for me is it's, you don't need to be the most technical analyst. You just need to be able to know how to map out your key high term time frames. You need to know how to look at volume profiles, look at where price gets a bit sticky in the chart, and then just back test it. How well does it perform? How well do we come and tag these specific areas? Where would you essentially have a potential long or a short? I mean, we're just trading this nice little range. We have a breakout. We come and tag here, you know, and this right now is shown to be quite a nice another kind of order block area. So if you think this would have been an order block, right? So you would have marked this as an order block here. You can tell it's an order block just because of the rejection you get down there, right? So let's say you put this order block here. What are you waiting for? A retest. Okay, comes back in. So you got your order here, straight in, and then you're in for another trade. So again, without being overly technical or having to think about where smart money likes to go, you've all of a sudden got a bit of a framework to work to. And I just sad as it sounds, I can just watch this all day long because I like to think, okay, well, does the I mean, look, again, scan work down, just tagged. If you get a reversal here, you got your key high term daily level here. You've got your volume profile. We come straight back up again, and now again, it's basic stuff, but it's really powerful. And I think sometimes the trading likes to overcomplicate stuff. Again, VRVP, come back up, trading in a range, congregate around your key high term time frame daily level, consolidation. Why? Volumes being traded between parties. This is a key area where we're trying to consolidate after a big sell-off. Again, you know, just looking at your key levels, bouncing between them. Day traders paradise, this kind of stuff, because you just go from level to level. Order block. So an order block. So you've got two types of things. You have things called fair value gaps, and you have things called order blocks. An order block is usually constituted towards some sort of institutional rejection. So if price goes to a specific, let's call it an area of value, right? So this would have been an order block, right? And we don't know why it's an area of value, right? But just that when the price has gone up to this point, big players have stepped into the market and rejected that price. So you can I mean, we'll see how this comes out, but what you can probably tell now is, because the reason I know it's an order block is because price has been rejected, and not just rejected, but rejected quite firmly. So what you normally do is when you see these big rejection points, you put what's called, you know, an order block. So an area that you cover, which allows you to essentially assume that price is going to come back to this order block and more than likely get rejected again. So you would have a short order somewhere in this region waiting for that to be filled. The other thing you often get is something called fair value gaps, which is where, let's say, you'll have, let's see if I can find one. So this would have been a fair value gap here. So if you look, so this can, let me just zoom into this a quick second. These are two important things to understand on the chart, but a fair gap, it's almost, think of it as like a vector candle. So where you've got this candle here, and you've got a wick on this side to the left hand side of the candle and a wick to this side of the candle. Well, the gap is the distance between the wick here and the wick there. So that is a fair value gap, okay? And that's where the price action has happened so fast that no one's had a chance to come back and trade. So what the market algos like to do is come back to retest this area, to bring orders back into this specific area. So what we'll do is we'll call, I don't know if we can come back down here, but we'll call this just to test this theory, right? So fair value gap, We'll call this, we'll call it a orange, and the background's orange. Okay. It's already been tested. So normally, as long as it gets filled about 50% of the way, you can classify that as a filled fair value gap. Order blocks, though, this is still probably a live order block, which I think will get retested. But so an order block is just an area where a lot of big institutional money has stepped in to reverse the market. A fair value gap is where you have a big amount of orders that has meant the candle has moved that fast, or the amount of orders have pushed the candle through that fast that there's a gap between, you know, the wick of the previous of the kind of aforementioned candle, the candle that follows it, hasn't come down at least halfway to cover the fair gap of the candle, or from the previous side. So that wick area there is, or this box area is the distance between the wick to the left and the wick to the top here. Hang on, I haven't quite got that wick there. These are just things where, like, whether it's an algo from the exchange or, you know, the main market algo, they like to bring the price back down to fill these gaps. So it depends on who's normally in control of the markets, but if it's institutions, you'd want to favor order blocks. If it's like the algos, then you might want to favor fair value gaps, for where smart money might want to come back and retest. But this, I think this is probably suggested that with this wick here, that this is being filled. Okay, but I think as a theory, we want to test: do we come back up and retest this order block? So if we have a short order in here, will it get filled? Just remembering that we're always paying attention to our key high term time frames. Okay, do we come back up and test the order block? And you see again, just kind of, you know, lollygagging around these key areas. Again, level to level. Okay, and then we come out. Took us about 7 or 8 days, but you know, we've come back now. If you had a short order in here, what we want to see now is how much of a, you know, how much of a move will this be to the downside. Well, already you look on it, it would have been a fantastic move, because you know, you've gone from, that would have been an amazing move. So you know, you got in a 439, and the price hasn't even really came back. So the price went to 400. So a nice $39 basis point move. Now whatever leverage you're using there, is, you know, who knows, but just it's things like order blocks. They are more smart money concepts. This idea that you want to be on the side of the institutions rather than the retailers. I mean, that would have been a crazy move to have got onto. And these are just things that you see in charts all the time, by the way. I mean, damn, I would have liked to have got that move, to be fully honest. That would have been a lovely move. But yeah, so as I say, guys, I mean, look, we teach this stuff. This is probably everything I've shown here is just basic standard stuff. It's key levels. I mean, look at that volume profile. Where did we print that volume profile from, by the way? If you remember, right, here's the key thing that we need to understand. When we put these volume profiles out, they're done from, you know, we didn't have all of this price action painted. These were created from previous data. So we're trying to always anticipate, where is price likely to go? Why is it likely to go there? Well, it's where volume's been traded before in the past. So you'd always look at key areas of potential retracement, you know, return, where the momentum of the change might occur, and that would have been another lovely enter. A buy order here down there. Comes back up just shy of key daily level, bounces off a weekly. Now, obviously, here's the other key thing. When we went and done our replay mode, right, every time we have a new day, if we have a change of direction, we would have mapped that out as a new daily level. We would have mapped a new weekly level out, or even a new monthly level out each time we get a change of direction in terms of a move to the ups or a move to the downside. So these are a living organism in terms of your high term time frame. So right now we might see that this is bouncing here, but that might be a key daily level if we were to actually put it on. So all we're showing right now is previous daily levels. We haven't painted any any new ones, which typically we would do. If we were doing this once we've agreed on our area. Now you can probably suggest that this weekly level will be a really important level, the point of control down here. So we mapped out, if you remember, we mapped out our point of control, our value area high and our value area low. So we know we've got some key levels. We've got a monthly and a weekly right around that kind of 303, 302 area. So I'm anticipating that these are going to be really, really sticky levels as well by the time price comes down. So let's continue. But that move, geez, that move from all the way up here, we put our order block out at that point, and this is where we got filled. Okay, it took however many days, but geez, that would have been a super move. Again, just respecting daily levels. Starting to see some structure forming now. And as you guys can tell, there's nothing complex about doing levels. I think we get more complex with. I think oftentimes indicators can overcomplicate matters. Really, we could have done quite well just on trading level to level. I know Aptech, a good friend of mine, also has a similar server to me, is in the server, and he's very much a level to level guy, very technical. Doesn't overcomplicate stuff with uh, with too many indicators. I think as long as you've got a good sense on price action, a good sense on key levels, a good sense on kind of where markets like to move, understanding these things like the fair value gap, so where price is likely to come back and retest at some point, then and you're patient, and you're always going to be there. Now, the way I like to trade is I like to use DCAs. So I like to, if I've got a key area, and that key area may be two or three key areas in and around a more key area, I will have an average level. So I will say, like, okay, I like this specific area, and I like this area, and I like this area. So I will have three orders that are short orders in the anticipation that if all three of them get filled, that might be an average entry for those three orders. Okay, but my liquidation level will also be average depending on what leverage I'm using. The idea is that in and around your key levels, you don't have to be as precise as you need to be. With crazy leverage, you just have to make sure that you are in and around in and around an area where you expect a pivot to occur, some sort of rejection, or where the price is going to get a little bit sticky. So, um, this is really it, guys. Really, this is as basic as I wanted to keep it today, to be honest. As you know, we're building a complete framework around a sponsored traders agreement with Danny and MDB and all of our friends over out there, and what we'll be doing is putting you through a traders basically a traders program. Almost you can think of it like an FTMO style kind of traders program. However, it's not going to be it's going to be DeFi based, and you can trade crypto. You don't have to trade kind of forex, and it's going to be amazing, really. So the program will put you through your paces. There'll be an exam at the end of it. That's fine. But then if you satisfy all the required elements, you will be funded. We will open you up a sub account. We will delegate funds to that sub account. Look at that scam work there, Jesus Christ. And you will trade, and depending on how good you are, we will delegate more capital. If risk starts to come into play, we may remove some of that capital. That will be at the discretion of the team. But if you know that the opportunity is there for anyone who wants to do it. The traders program will be coming out in February. We're just finalising the training sessions. It will be done through a dedicated platform, and so will the exam and the kind of the example element that you'll have to go through. I don't want to speak too much about it right now, but we will be aggressively marketing and kind of going over it. Now, who's going to be open to? Of course, anyone who's in the Millionaire Club will have access to be able to come and go through the program. It doesn't matter if you're not good enough to start with. You can start on a relatively low amount of sponsorship. And the idea is that over time, as you start to show consistency, we can decide to up and delegate that level of capital as a sponsorship. So it's a really, really good opportunity for anyone who wants to be involved. All you've got to do is come over and join my Discord server. Make sure you're part of the Millionaire Club, and then once we release, you guys can just go through the sessions, and once you're happy, we'll assess it, and then we go from there. But I love this, as I say, key time frames, nice and easy, not too exciting, not a bit of a pain in the ass to set up, and it looks a little bit messy on the chart. Now, normally, this is the pace in which this is going, by the way, isn't your 10x. It's like it's 1x, and you kind of you're anticipating where price is going to go. So you're like, okay, well, maybe I'm going to wait until it comes down to the weekly level, and I'm going to put a long at this point. And then if so I'll do like 10% here and 10x. I'll do another 10% here as an example. Now, there wouldn't just be this. There'd be some other TA that understands, are we in some sort of an Elliott wave? Is there some way in which, I don't know, I mean, I'm not a massive fan of moving averages, but you might want to look at moving averages as a way to kind of identify these kind of things. It's entirely up to yourself on how you trade. There's never going to be this way is the only way and this is the best way, because that's just not worth saying. But this is a guide just for levels to figure these out. But there's many more good ideas about how you can trade. Cool. Well, I'm glad you guys enjoyed it. Nice and simple one to get the wheels greased and started off. If you liked this and you want to know more, feel free to come over and get into Apex Trades. I'm hoping, by the way, and I don't know, in the description there should be the server invite. So if you haven't yet got yourself over there, come over and say hi. We talk about this stuff day in, day out. I live and breathe this stuff. And that's about it, really. I'm going to leave you with a nice little promotional video, just to keep the momentum up. And I guess I shall see you guys hopefully in the server, or if not, I'll catch you guys in the MDB server. Speak to you soon.